Game. This is a community for the Women on Wall Street initiative to really get girls to be interested in the stock market. So anyone out there, if you want to join the WoW Investor Game, the QR code right there is what you're looking at.
I think Austin just got in the Zoom room.
All right.
So we'll let people grab this link for a couple more seconds, and then John, can you switch it to our guest speaker slide?
Yeah.
Yes, absolutely.
All right, awesome. So I'm so excited to announce our first guest speaker for the day, Austin Hankwitz. Many of you may know him from doing his stock analysis on TikTok. He has over 300,000 followers. I'm sure, I mean, there's a reason you get that many followers. It's hard work, and he knows what he's talking about. So definitely hone into what he's saying. And he works as a strategic financial analyst for Amadeus, if I'm pronouncing that correct. And I'm now going to hand it off to Austin to tell a little bit about his background, and then we're going to jump into Q&A. So start thinking about questions y'all have for him. He's a really interesting guy, and I'm excited to have him here.
How's it going, Grant? I appreciate the warm welcome, everybody. So first, it's Amadeus, not a me. This is but yeah. So 24 years old. Oh, first I'm gonna preface this. I've got my camera on this side. I've got some notes. I've got the monitor thing going here. So if I'm looking here, I'm looking here. Just bear with me, guys. The whole home desk setup is only so great. But yeah, a little bit of background on myself. My name is Austin Hankwitz, and I currently do corporate development for the nation's largest independent home health, hospice, and personal care company, Amadeus. I graduated from the University of Tennessee back in 2018 with a degree in finance and economics. While at UT, I served as a resident assistant, so like an RA, babysitting for the most part for freshmen, as well as a treasurer for an organization called All Campus Events. Which you can think of as a organization that planned homecoming every year, as well as a few other events. But after I graduated, I began working out of Medicis in Nashville. My formal title is strategic financial analyst, like Grant said, which is Medicis defines that as this really smooth mix between corporate development, which is mergers and acquisitions, as well as investor relations, which is a lot of keeping up with Wall Street's expectations of us as a publicly traded company quarter to quarter. And I get to go on some non-deal roadshows, meet with some hedge funds and all those different types of people to try and convince them, maybe not convince them, but give them a little bit more background on Amadeus as a company, where we're headed, what we're thinking about, and why we would be a solid investment for their company. And the last part of my job responsibilities are special projects, which is just sort of like pilots, right? So like whenever we're trying to figure out, maybe we think this new business offering, this service offering would be a good idea. We've got to put together some sort of pilot infrastructure around how we can implement that. And an example of something I've worked on pretty recently was home dialysis. So, the Amadeus is a home health, hospice, and personal care company. So we're all about delivering care, acute care in the home. And that's, as baby boomers and all these other, these demographics of people begin to move towards the 70, 75, 80-year-old range. And we, with coronavirus, we're seeing that skilled nursing facilities as well as like nursing homes, it's really now with, especially with coronavirus, like it's scary to go to those places because all these frail people are so close quarters with each other. And it's not, according to an AARP study, it's not where these people want to spend the rest, the last 5-10 years of their lives, and they'd much rather age in place is what it's called. And so Amadeus, we realized that ESRD patients, which are people with failed kidneys, they have to undergo dialysis, and the best place for optimizing health outcomes while undergoing dialysis is in the home. They're able to do it a lot more frequently, and it's a lot cheaper. And so I was able to, for the past 18 months now, 2 years, really put together this service offering, figure out the financials behind it, figure out how we're going to implement it and scale it. And it's been a long journey on that one, but so that's a little bit of background about myself. I'll talk quickly about how I guess I got over onto TikTok. Back in, I want to say late December, I realized that I really wanted to begin talking more about personal finance and investing. I'm a huge Dave Ramsey fan, and I really enjoy learning, talking, discussing. It's everything about personal finance and investing. But one, my friends told me to buzz off because they didn't care about it. And two, the only place people could really do that in a very, scalable manner was on YouTube. And I didn't have the ability to edit videos and do all this, big, I didn't have this infrastructure team behind me like some of these other people do. And I just wasn't equipped to put out YouTube videos in a regular fashion. So I was like, well, where else can I, begin making content about this? And so I saw TikTok was super easy to film on, super quick to edit the videos. And so I made a video about dividend investing, which is something, it's a strategy that I really like. And it caught some attention. I had a couple 100,000 people watch it in 24 hours. I was like, holy crap, this is crazy. And I woke up and I called all my friends like, yo, I'm TikTok famous. Like this, like I got 1,200 followers now. Like check me out. And it was insane. And I was really excited about it. And so I guess how I began building upon that was I was just looking at the comments people began leaving on my videos, and then I began making creating content curated for their specific wants and needs, and then it just sort of snowballed into what it is today. But I really enjoy creating the video content on TikTok, and yeah, we more than happy to begin answering any questions you guys might have or any participants might have, and let's get it going. Let's do it.
Here, I have a question for you. So besides that, like dividend investing post that you made, what's like either your best prediction that you've made or like the biggest blow up post that you've had?
Okay, perfect. I'll talk about the first biggest blow up post. So this was back in, the first video I made, I believe was the middle of March. Coronavirus was running rampant. Everyone was freaking out. The stock market was crashing. I mean, it was down 7, 8, 9, 10%. The S&P was in a single day. Stores were closing at an unprecedented rate. And so the first thing I saw was that Apple, in my opinion, was going to be screwed because one, people were losing their jobs at an unprecedented rate, and which would then in turn mean that they don't have money now to go buy their iPhones, go buy these AirPods, buy these wearable technologies, whatever that they're Apple's selling. And not just that, but Apple didn't have the stores open to sell them those products. And I was like, Apple is going to there's no way that this is going to be sustainable. Like their stock's at 260, it's going to go to 210, 220. Like they just won't be able to keep this valuation with because I read that KeyBank came out with a report saying that in Q1, Apple iPhone sales dropped 52%. And I'm like, well, if Apple iPhone sales make up 78% of the company's annual revenue and they're down 52% year over year, like the stock prices has to go down. This is crazy. And as we've seen, I was completely wrong. They've crushed it since. People just bought the dip and kept riding it out. But yeah, that was definitely my biggest flop of a prediction so far. My biggest winner though was VTIQ and Nikola. That was a crazy anomaly. And I think I kind of feel, I don't want to say I feel bad, but I definitely have like a weird regret about posting the video because I think I gave a lot of new investors the idea that stocks can go from $14 to $90 in 2 weeks, when in actuality, like that's not how it works. That's not how any of this works. And so that was a little tricky to kind of help people realize like, okay, that was a cool thing. Like that happened. It was an idea. I turned out to be right in an extreme way, but like, this isn't real life, right? Like this was some crazy anomaly because of one, the hype of the, all your Robinhood investors, and Nikola's CEO was a very outspoken on Twitter, so he was always trying to help move the stock price up or down because of that. And it was just it was definitely a weird experience, but yeah, that was definitely my biggest winner for sure.
Yeah, that was actually the post that I found your account on. One of my friends sent me this, and he's like, "Dude, this dude just said it's going from 14 to $50. You gotta invest." I'm like, I don't know about that, and I threw $200 in, and made me a lot of money.
Well, it's so funny too. I was here because I live in Nashville, Tennessee, and I had some friends visit. And my friends' friends is where I said, so my friends' friends also came that I hadn't met before, and they're talking about stocks and stuff, and they're like, yeah, man, I saw this guy post a video about Nikola too, going into all this crazy stuff, and I was like, really? What did he call it? Like the next Tesla and give a $200 price prediction on it? And they're like, yeah. And then I pull up my phone and I was like, that was me. It was just the funniest thing, man.
Yeah. So would you say that you think maybe you might have caused that, the big
I
hype
don't
around
see, I don't,
Nikola?
oh gosh, I wouldn't say that per se. There's a lot of so like that's the thing. People think like, or even have the idea that maybe a TikTok or any video online with a couple 100,000, even a couple million views could really move the stock price. But if you think about all the millions of shares that are exchanged every day on a daily basis, just because that's natural, right? Your average volume. It's hard to really justify and like really say, yep, Austin's video really no, I don't see that as it's just not a thing in my opinion. Maybe I caught the attention of these Robinhood traders, right? If we go to Robin Track and we see that maybe my video and then like the specific day it was published as well as like how many people bought, like sure, I would definitely claim on that one, but Robinhood's volume I would say is very small compared to the overarching volume of the entire stock across all brokers.
Right. So when did you like first get into like finance and like when did you, at what point did you know you kind of wanted to pursue a career in financial analysis?
It's a great question. So I'd say back in, gosh, man, I've always had this knack and this really enjoyment of understanding and digging into business and how businesses operate. And so, like for example, I've always been some sort of entrepreneur. I like to think of. I mean, back when I was growing up in middle school, like we'd have a snow day, and all my friends would be like, "Let's go play in the snow." And I'm like, "Yo, but I got a snow blower, and I can like go to all these people and snow blow some driveways and make $200." Like I just always have been thinking like that, and so I've always wanted to figure out the best way to run a business, how businesses work. What drives growth, what drives margin expansion, as well as all the other fun things. And I've just really enjoyed getting into that. And then once when I was in college, I began taking these classes in finance where I really got to understand accounting, like from a very intimate, like on an intimate level, as well as how the accounting that we do translates into the reporting on SEC, the Security Exchange Commission's website with like the formal, Form 10K and your 10Qs and 8Ks and whatnot that come through that. That's when I really was like, yo, I love doing this. Like I can just sit down and read a 10K front to back and just enjoy every moment of it.
Yeah, that's awesome. So we have some questions coming in the chat. Just a reminder for y'all, if you have any questions, just type them into that chat and I'll hit them. So Shivam asked, what's your approach to risk management?
It's a really good question. And I'll take that and expand on it to when it comes to as pertaining to how I guess invest altogether. So I think that one of the best investing strategies that someone can use is what I call the core and satellite strategy. So what that means is you have your core investments and then you have your satellites on top of that. You want your core investments to be your long-term, strong, well established companies with a long track record of even dividend paying and it increases, or revenue and margin expansion. The industry they operate in it's not emerging anymore. It's validated. It's a strong company, right? So those are like your Apples, your FANG stocks, right? All that fun stuff. And sorry, my phone just rang. But that's like, so that's your core portfolio. That's going to be 70 to 80% of your portfolio's balance is going to be in those core stocks. That includes not mutual funds, index funds like VU, VONG, VUG, VTI, as well as maybe some dividend investing index funds like SPHD. So now as we flip over to think about the satellites are then going to represent 20 to 25% of your portfolio. So those are going to be your more speculative emerging industry ideas, like your Nikola's, like your Bets, like your couple others, Datadog, Cloudflare, more companies that are obviously great ideas that you're optimistic about, and you are thinking that these companies are going to continue to emerge and grow as the decade evolves, or you wouldn't be investing in them in the first place, right? Investing isn't gambling. We're investing in real companies with real management teams. But it makes up a lot less of your overarching portfolio's balance because it is important to realize like this company is not, they're not got it all done yet, right? They're still figuring out, they're still moving up and establishing themselves as a true business. And as we think about risk management, if we allocate obviously only 20-25% of our total portfolio to these more speculative investments, if we hit big on them and they end up, doing all these great things and their stock price goes through the roof, well, that's fantastic. But maybe if they don't, they underperform the market. Well, that's not a very big deal. Maybe it is a big deal, obviously, but it's not like a huge overarching terrible thing because so little of your portfolio is in these companies. And so to expand more on the speculative satellite part, I try and have no more than 1 to 1.5% of my total portfolio's value in one specific speculative company, where the core holdings, I'll move that up to 4, maybe even 8%. So for me, that's anywhere between $600 to $800 in these speculative companies, where these core companies can have thousands of dollars in them. Like I've got $5,500 in Home Depot, for example.
Nice. Yeah, I've Lowe's competitor of that. It looks like the chat is blowing up with questions. People were slow on the questions at first, but now they're coming in hot. So you talked kind of about identifying trends like for those speculative investments. People are wondering if you could give them an idea of like what industries could potentially experience the most growth in the future, in your opinion.
So I think a couple companies I'm really excited about. First off is DocuSign. I'm really, really excited about DocuSign because I believe that first off, DocuSign has at least they're moving towards offering smart contracts, which are integrated into the blockchain, right? So I think if enterprises are ever going to use the blockchain, it's going to be through smart contracts. And so what DocuSign's doing is they're helping bring real world data and provable validated data onto the smart contracts, because the smart contract is only as useful / true as the data that's given to the contract. And so I think DocuSign's doing a lot of fun stuff with smart contracts. But so when it comes to merging industries, people are excited about online sports betting and iGaming. I do have an investment in the ETF BETZ, but like I said, it's only $600-800. But I think that as iGaming and online sports betting, that industry continues to emerge, and they'll have to get over some legislative hurdles because obviously gambling isn't offered in every single state. But a little excited about that one. I'm also excited about Cloudflare, right? I think that they're doing a really cool thing when it comes to security as more and more companies move towards going digital. Cloudflare is going to have a fantastic tailwind pushing them forward as well. Plus, digital marketing. I made a stock pitch about Adobe. I'm really excited about them as more and more companies move from traditional marketing, either through TV ads or even just having a storefront and moving that onto online. Adobe, they have a suite of apps and products that will help create that experience a lot easier, as well as have a better, I guess, outcome for these companies. Because I think through Adobe too, you could run campaigns, all these other different things. But also, another company I'm excited about is Roku. I think the smart TV industry is still emerging, and Roku offers, I think, 38 to 40%. So it's really weird, right? You might think that, okay, like not everyone I know has a Roku TV, which is totally fine. But what is cool about Roku is that they white label their operating system to a lot of smart TV companies. And so as more and more smart TVs emerge, you don't have to be buying a Roku TV for it to be using Roku's product. And as well as, for example, going back to Adobe and the digital marketing thing, Roku now has 80 million people. Was it 80 million? Maybe it's closer to 40 million, but tens of millions of people are cutting the cord around America for not, cable and whatnot, and just using streaming services. Well, then how are these, people going to be able to advertise, these enterprises advertise towards these people that only stream and have to cut the cord? Well, Roku is now offering a way for these enterprises to leverage their operating systems and their infrastructure to then market towards these people that have cut the cord. And so I'm excited about Roku, and I'm excited about the whole digital marketing thing as well. So Adobe, Roku, and Cloudflare, I like these companies a lot, and the industries they're working in.
Yeah. Does there ever come a point though where like these stock prices are like kind of speculative and it seems like they're being priced out in the future too much to where you don't want to buy them now?
So I would definitely agree that, you see a crazy run up and you're like, hold up now. DocuSign's up 100% year to date. That makes no sense. Like what? So I think of it, right? A stock price is just people, the stock price is predicated on the company's ability to create shareholder earnings in the future, right? We have assumptions and growth assumptions and discount rates and everything like that. And so people now, what drives the stock price up is, investors' sentiment thinking that this company will be able to grow shareholders' earnings in the future. And what I think is what we have been seeing now as earnings happen the last week or two, and will continue in the next couple of weeks, is these companies that have had these 100% run-ups or 60 or 80 or 200% run-ups, like Zoom, for example. We see these crazy run-ups happen because people are optimistic that in the future they'll be making more money. But then what happens is, and this happened to Amazon back in 2000, I think it was 13 through 16, they traded sideways for a long time. And I think that was their financials and their operations catching up to their valuation, right? We see that DocuSign's had this crazy run up, as well as Teladoc and Zoom, and even Shopify. And now it's time we see that they trade sideways for a little bit, if that's 9, 18 months, if that's even 6 months, I don't know. But they trade sideways while they're able to say, okay, you guys gave us this $100 billion valuation. We appreciate it. But now we have to prove to you guys that we're able to grow our revenues, expand our margins, grow our profits, earnings, all that fun stuff, and show that we deserve to not just have this valuation, but grow more in the future.
Yeah. I like how you explained it. It's like there's a time period where they're realizing their value in a way.
Exactly right.
So we had a question from Rehan Buvaji. Do you believe the influence of social media in the stock market will continue to grow?
Yeah, I would say so. I think what's really interesting, we think about when maybe even 20 years ago, 25 years ago, we think that if you wanted to invest in the stock market, you had to call up a broker, right? You got to say, hey, Mr. Smith, I would like to buy 50 shares of Apple. Okay, no problem. And then you pay him a commission, and then he goes and executes on that order. But now we have the ability for all the people in this room, I'm sure, have Robinhood or Public or whatever, online app on our smartphones. And I think giving us retail investors the ability now to invest at scale for no commission is really, really powerful. And what do people our age love to do is we like to talk about things that we're doing on social media. And so I think that social media and investing will definitely begin to continue to grow. Yeah, 100%.
We had someone ask, how do you think, like, how is coronavirus affecting healthcare companies? Like, yeah, I can't pronounce it to save my life. What is
Oh,
it again?
America?
Yes,
Okay, yeah, sure. So,
Emeticis.
yeah, I'll definitely give you guys a good background on our coronavirus efforts. So, let's back up for a second. Emeticis makes money in three ways. First, we offer home health, which is a nurse, maybe a physical therapist, or someone traveling from their office, going to someone's house, ringing their doorbell, walking inside the home, saying, hey, we're going to do these specific physical therapy sessions, or I'm going to take your blood pressure, or we're going to do whatever acute care you need. And then I'll be here for 45 minutes or an hour doing this with you. That's called a visit. Each home health nurse offers about 18 to 19 visits per episode, which is a 60-day period. So we go to these homes, do these things, and then we come out, they're done. Hopefully we're able to help this patient recover or do whatever reason that they would prescribe the home health. That's 1.4 billion, 1.3 billion in revenue for Emeticis is doing that. Then we have hospice, which is you are terminally ill, you're older, you're realizing that you are no longer wanting to go through medical treatment, and you're ready to just have the pain go away, relax with your loved ones, be at home, and a hospice nurse comes, makes sure that you're comfortable. She makes sure that you're, everything's okay without getting too morbid here. But that's hospice, and that's about 300-400 million dollars in revenue there. And then we have personal care, which is non-skilled labor, non-skilled aides going to the home as well and saying, hey, I'll help you out with your activities of daily living, which means bathing, dressing, medication reminders. It's just how to keep these older people engaged and moving as they should. So one of the biggest hurdles about the coronavirus was, one, it impacts the older demographic a lot harder and worse than it does the younger demographic, right? So if you're 35 and you get the coronavirus, chances are you'll be okay. You might, feel pretty cruddy for 2 weeks, but you're 9 times out of 10, you'll probably come out of this alive. Where for older people, they can't say the same thing. So a lot of older people, obviously our average patient age is 79 and a half. They were terrified to let people into the home that they didn't know, right? We were all on stay-at-home orders. No one wanted anyone to come in, go out. Everyone's freaking out about that. So we had a lot of something called LUPAs, which means LUPA, which is an acronym, which means that we had a lot of people say, hey, we want to go through this entire episode with you, but then halfway through, they're like, nope, we're out. We don't want to do this anymore. And so that was definitely an impact on our revenue. Our weekly visits dropped about 28%, 25%. And luckily though, and we were able to, show them we had great PPE, a lot of, protocol in place to show that, we can go into your home in a safe manner. And we saw, good V-shaped recovery back up in the admissions, as well as, new people referred to us, as well as our ability to go into the home and people not being freaked out about it. Excuse me. And so, how has coronavirus impacted us? We had a big drop off in that. It's soon though recovered. Hospice though wasn't a big drop off. People realized, I feel like, they were on hospice for a reason. If they did get the coronavirus, they were on hospice already. So luckily we didn't see a drop off in that. But what was interesting though is back in 2018, legislation was passed saying that the government, Medicare, was going to reimburse, which means pay, give us revenue, reimburse us less for our home health services. And since home health was our pretty much bread and butter, it made up about 70% of our revenue at the time. And there's about maybe 12,000, 13,000 home health agencies in the US, and the average home health agency does about 1.5 million. So like these, I won't call them like small mom and pop shops, but they're definitely smaller businesses. And after doing extensive research, we realized that their margins were a lot smaller than ours, as well as the cash on hand to pay their employees was a lot less. And so going into 2020, which is when this legislation, lower reimbursement, was going to be taking place, we were expecting a lot of these mom and pop shops to go out of business simply because they weren't making the revenue they needed. They were going to start reaching out to other bigger providers and say, hey, come buy our business from us, or maybe even private equity funds say, hey, you work in healthcare, come buy our business. But what happened instead is the CARES Act was passed, which gave all of these providers hundreds of thousands and millions of dollars in liquidity because, trying to help out small businesses and everything. And so it was crazy. So now we were thinking, from an M&A perspective, no problem. We're just going to start snatching up these mom and pop shops, just going to bolt them onto our business, and we'll go from there. And now it's proven to be the opposite of that. They all have liquidity now, and they can probably go on for another 6 to 8 months without really getting worried again. So that is one of the bigger things that coronavirus has done for us, was our inability to pick up some of these smaller shops.
Yeah, that's interesting. So Gordon Lee asked, I'm sure a lot of people are wondering this hot question right now. What are your opinions on the government trying to ban TikTok?
Oh gosh. So last night, I was hanging out with some of my friends over at their house. We're drinking beers, we're watching the Rockets NBA game, right? Everything was fun. And then I hop on Twitter and I see Trump says he's banning TikTok. And I'm like, I gotta go home. I gotta get on live. I have everyone I'm following is live right now. They're watching they're trying to get as many people to move from their TikTok over to Instagram. And I'm like, I gotta do the same thing. So I was live till 3 a.m. last night, trying to just talk with people and have them move over. But here's the thing. I see it's more of like a Cold War, right? Um, it's a lot of threats. It's a lot of it's hard to it's hard to really, I guess, dive deep in, because right, it comes down to data, where data is stored, how they harvest it, and how they're using that. Obviously, people are speculative about data really being stored in the U.S. I think it's a lot of it's going to China. But on the same token, too, I saw someone have a conspiracy theory last night saying that, maybe Mark Zuckerberg is like pushing for this because TikTok was obviously one of the big things to come at his brand and his company. And as we know, back in maybe 3 weeks to 4 weeks ago, whenever all these large enterprises were pulling their ad revenue off of Facebook because Facebook refused to take down something that Donald Trump said. I don't know. It's really weird, but how I think this will shape out. I don't think Trump will ban it. Not anymore. I read about 3 hours ago on Reuters that ByteDance was gonna let Microsoft or whoever wanted to buy it take 100% of the U.S. operations instead of the 51%, which was originally proposed. So yeah, to begin with, last night I was freaking out. I was freaking out this morning until I read that. But now I'm a little bit more optimistic. And when it comes to Microsoft scooping it up, though, with TikTok divesting and Microsoft being the one to acquire, I don't know how that'll play out. Microsoft doesn't have a great track record of social media apps and companies, right? Skype. Obviously, we're on Zoom right now. But so I don't know about that one. But as long as as long as they are able to continue to operate in the U.S., they'll be successful either way. I mean, they've already shown that they're strong. They have a strong community on their app for sure.
Yeah, you were talking about the Rockets versus Mavs game. I had to take down my background so I could show you the Doncic jersey. It's a tough night.
Nice.
Tough night last night with the buzzer beater against us, but we'll bounce back
man.
hopefully. So we had a question a while back. Have you ever traded spreads? Luke was wondering this.
I'm assuming you're talking about option spreads. And no, I've not. So let's back up. Talk about derivatives for a second. Option contracts. All an option contract is you're making a bet that the stock price will be trading at a specific price, either up or down, before a specific date. You're not investing in a company. You're not looking at anything other than the stock price. And if you're right, then you make a lot of money. If you're wrong, you lose all your money. I consider that gambling. I'm not a gambler. Obviously, back in college, like, it was fun to say, oh yeah, maybe Apple will beat earnings and I'll make all this money if I buy a call option on them, or oh, this company I heard is going to have bad news, so let's just buy put options now. It's fun to have some fun like that, and I'm not mad at anyone that does that. It's just not my investing style anymore. But no, I've not done option spreads.
All right. So when people are wondering, when did you make your first investment with your own money, and what did you invest in?
It was Apple back in right in the senior year of high school. So, a little backstory: my parents have always used Apple products. I had one of those. I'm not sure if y'all remember, but they had like these little desktop computers that looked like marshmallows, and they were like a weird, like, crazy colors. They had like greens and purples and reds and pinks. Like, after you hop off here, just type in like Apple desktop computer green or something, and you'll see it. And that's what I had growing up. And so we've always used Apple products, and I've always been very familiar with them as a company. And so right as I was 18, I obviously didn't make the investment myself. I had to reach out to my dad and have him help me figure out how to do that. But yeah, it was back then. So that was what, 2014, 2013? It was a while ago.
Let's see. So what would you say is the best trading app for beginners? I know a lot of people have been talking about Robinhood in the chat here.
Yeah, so I feel like Robinhood gets a lot of bad press for no reason, in my opinion. Everyone's like, oh, Robinhood sucks. Why use Robinhood? They glitch and they take your money. Like, no, they don't. Like, that's not a thing. Like, that's illegal. They wouldn't do that. but people say trading and investing, right? Like you said, what's the best app for trading? Well, the best app for trading is Thinkorswim. The best app for investing for beginners, I would say, would be Robinhood or Public.com. If you're able to buy fractional shares, that's all you really are looking for, especially if you're a beginner and you don't have a lot of money to invest. You can't just go out and buy one share of Amazon for $3,000+. So fractional shares obviously comes in handy right there. But I think Robinhood, if you're a beginner and you're just looking a way to get into the stock market, Robinhood or Public.com. Public is cool because they also have some additional educational materials, and you're able to, I guess, follow other people that have portfolios on their app, like Shaq, I think, is on there, and a couple other people. But yeah, definitely say Robinhood or Public.com for investing for beginners. And for trading, I've never been into the day trading and all the technical analysis with the moving averages and lines and stuff like that. I'm just familiar with it, but never done it. But I've heard great things about Thinkorswim. So if you're a trader, check out Thinkorswim.
Yeah, awesome. Thank you. And then I know from your TikTok videos, you focus a lot on kind of quarterly or earnings. So what are the main things you're going to look for in quarterly earnings to identify a good stock?
Yeah, that's a great question. So let's just back up then and maybe talk about how I identify a good stock, or what I look for when I'm trying to determine if a stock is a good stock, right? So before I dive deep into maybe the industry that they're working in, the industry that the business is trying to leverage growth into, you look at the company itself. First thing I do is I pull up the 10K. That can be found on sec.gov, and all a 10K is it's an annual report that gets put out that talks about what the business does, right? So like if you go to Apple's 10K, they'll say, "Hi, our name's Apple. We sell iPhones, we sell laptops, and we sell iWatches and whatever stuff, right? Or Apple Watches. We sell these specific electronic products. These are the ways that we make money from selling these products. Here's who our customers are." And then you start scrolling down, but from a understanding of business perspective, what an actual business does, if you're totally unfamiliar with it, just go to the 10K. They explain it in the most simple terms. So then you begin scrolling down, you see the income statement. They normally give you 1 year over 1 year, but I like to go to seekingalpha.com and go to their income statement on there, because then I can see it going back to the past 10 years. So what a couple things you're looking for to figure out if a stock it might be a good stock to invest in, or a company that is. You want to see top line revenue growing every single year, right? So we want to see from maybe 2018, 2019, they're growing 7-8%. That's constantly growing. Top line revenue is consistently growing. And if it's not, the top line revenue stops growing or have some sort of dip, you need to be able to go back and figure out why that is. If that's through going to a press release or going to their website. I mean, obviously, like the coronavirus would be a very validated reason for a lot of companies' top line revenue to dip, like what happened with Google. Yeah, Google just had their first time where their top line revenue didn't grow year over year. So yeah, that would be 100% a validated response as to why that happened. So, but you're looking for that top line revenue growth. You're going to look for gross profit. And the gross profit margin, you want that to either be consistent or expanding. So let's say you're growing your revenue, but your profit's not growing. Well, that's not good, right? We want to make sure that that's growing in proportion to the revenue. So that'll be simply listed on the income statement as well. And then if the company's profitable, right? So if their net income is positive, which is a good thing. It's not always a bad thing for it to be negative, because that means that the company could still maybe be in a growth phase. But if the net income is positive, you don't want that net income to go negative, right? Like that'd be red flag in my opinion. Obviously, unless there's some sort of underlying event, maybe like the coronavirus here, that would be able to explain that. But in summary, go to the 10K to understand exactly what the business does, and then we go back and we say, okay, let's take a look at the financials, which would just be the income statement. And you're gonna look at the income statement. You want to make sure that revenue is growing year over year. Make sure that gross profit is also growing year over year in proportion to the revenue growth. Maybe even they're expanding their gross profit. That'd be great. And then you also want to make sure that their G&A costs, right? So your cost of employees, your expenses, all that fun stuff is staying proportion or decreasing with revenue. And then also, if you're looking at the income, not the net income, obviously your earnings at the end of the year, your profits, you don't want that to go negative. You want to see that continue to grow as well. So, but the thing is, if it is negative already, not the biggest deal, right? Not too big of a red flag, especially if it's maybe a newer company and they're in the high growth phase. But if that's the case, you want to make sure that they're moving towards profitability. And if they're not moving towards profitability, they better have a damn good reason why.
That was good. Very comprehensive ways to look for investments, I guess, and kind of analyze those companies. So do you believe that coronavirus will have long-term effects on how people invest?
Um, how people invest per se, I would say probably not, right? Like people are still going to invest the same. We're still going to probably invest in the same industries and companies through the same brokers and stuff like that. But I don't.
I guess this question asks how investments are selected. I said it wrong.
Oh, you got it. Oh, okay. Yeah, it's actually yes. So I do think it will because I think I understand what they're asking now. Back in March, the whole stock market went down, right? And then people saw, wow, these airline stocks, they were just trading at $80. Now they're 20. Like they'll have to jump back up to 80. Well, obviously that didn't happen. Um, I think it will. I think a lot of people will either one realize that past performance doesn't equal future results, and people will realize that if a company drops off, oh, but they were trading 2 years ago at $200, but now they're trading at 40, like they'll have to go back to 200. Like no, like that's not how it works, right? It's all about figuring out, investors are trying to figure out how much money the company will make in the future and then price that into the current stock price. The stock market in the short term is like a voting system, right? Investors vote with their money, they drive up prices, they drive down prices, but on the long term, the stock market's a weighing system. It's weighing the current valuation to the earnings that the specific company is creating, and that's why I don't know if you saw, but Nikola's stock was like up in the 70 range when there were warrants to buy the stock, which I'm not sure if you're familiar with what that is, but the warrants had valued the stock at $40 a share, but the stock was up to 70. And so there was a big arbitrage opportunity right there to realize like the stock itself is overvalued compared to the warrants. But as the whole weighing system happens, the warrants didn't move when the stock price crashed because people realized the warrants were fairly priced. So back to my analogy about the weighing machine, as long as companies are earning money for shareholders and profits, their valuation will increase. That's just how it works. But how investors realize how investors execute on their investing strategies, I think, yes, the coronavirus will change, will impact that because people will either one realize, right, like past performance doesn't equal future results, or they'll just say, oh, but V-shaped recovery, as long as the stock price goes down, we'll see a V-shaped recovery, which they'll probably get burned if that's the case. But I definitely think a lot of people's ideology on investing was wrong going into this crash. I mean, I can't tell you how many people reach out like, yeah, man, but cruise lines, like they're down, like, well, they got to go up because people love cruises. And I'm like, that's, yeah, sure. Like, or like airlines, like people love, people need to fly. Like, yeah, you're right. But I mean, the CEO of Boeing said that they don't plan to have revenue back to where it was for the next 3 years. And like, I don't think I'll be flying anytime soon. And they just lost $10 billion. And it's kind of weird to think about that stuff. But I do think the coronavirus will impact people's ability to, their little investment strategies. Yeah.
Yeah, I was one of those suckers that I bought Hertz as soon as it like went down, and then it just continued to go down and went
Oh
bankrupt
man,
eventually.
well, that's the funny thing too. Like people are like, oh yeah, but Hertz is down. It's the $3, but it's at 18. I'm like, yeah, but it's the $3 because they filed bankruptcy.
Right, right, yeah. And I guess I mean it kind of goes to show you like I know I'm not gonna like get into those like that ideology where it's like, oh, it was at 20, it's still the same company. I mean, it's now it's at $3. I'll just buy it now. I'll definitely make my money back
Well, I think
because
what's interesting to understand is we're not geniuses. There are people that make hundreds of millions of dollars every year to accurately predict stock prices. They work at hedge funds, they work at investment banks, they do all these big things. They're equity analysts, right? What would I, Austin Hankwitz, know about Hertz for them to think that their stock price is going to go back to 18 that these people don't already know, right? And since they know that it won't, they're not buying shovels and shovels of their stock, right? So I think that is I don't know. I just think that we're not. There are people that understand this at a more intimate level than we do. And if a stock price was supposed to be at a specific price, it will be there. It should be there.
And it kind of goes to show like it's stock investing is like it's all about a continual learning process. Like,
Most definitely.
and
Most
it's about
definitely.
making mistakes, but when you make those mistakes, you got to learn from them, I guess, and not do it in the future.
Definitely.
All right. Yeah. So John Rowe asks, how are the hours in finance jobs? Do you have to work a lot of hours, or is it manageable?
That's a really good question. So when I first started working, my boss was very, hey man, 9 to 5, or it was like 8 to 5, but hey man, 8 to 5 every day. Don't sweat it. Like come in at 8, leave at 5. Don't stay late. Just get your work done. I was like, all right, cool. And then once I began working more with our chief leaders, our CEO Paul Fusero and COO Chris Gerard, um, it was like, hey, Austin, can you stay till 7 and help us get this presentation done? Or like, hey, can you get this done? And or hey, I need you to finish this by Sunday, or like all these different things. I'm like, damn, my 40-hour work week is now turning into 60 hours. So normally though, it's I would say close to the 40 to 45-hour work week if we're just having like a normal week and it's not earnings. We don't have a large acquisition in place that we're executing on, or something's just we're just floating along the river 40 hours a week. Earnings weeks, definitely closer to that 60, 65 hours. Big acquisition, close to 60, 65 hours. I'm definitely not an investment banker. I'm not working 100-hour weeks, but also don't get compensated like an investment banker. I don't get the 100% bonuses. And I'm very comfortable with my career path, the people I surround myself with, the people I work with. And so, no disrespect to people that do want to work those 100-hour work weeks and maybe leverage over to private equity, but or lateral that is. But it's just I would say it's pretty comfortable until we need to work a lot, and then when we do, like I said, 60, 65 hours a week.
Mhm. So we're coming up to a 5 minutes left mark, so we'll just do a couple more questions. I I had a question about like you did the invest like the street program.
Oh my
What
gosh.
yeah, what would
Best
you
program I could recommend to anybody. I
uh
swear on everything. All right, so um, obviously I have my degree in finance, all this great stuff, and I was ready. I understood it. I was really, I was on it, like two hands on the wheel type stuff. But I had like, I in class they never really gave us real examples on how to create a DCF model from scratch from public files, and how to understand how a leverage buyout really works and create the supporting materials from scratch from the public forms and stuff on the SEC. And so that course, in the most concise, simple way ever, said this was accounting, this is finance, because obviously finance is not anything without accounting. So here's what accounting is. Here's how finance works. Here's finance's goal. Here's how I'm going to help you hit that goal. And so I was, DCF models, leverage buyouts, like all the M&A, right? All the cool stuff that I do in my work now. I learned 85% of it from that course. I swear. I mean, obviously I got a lot from college and a lot of it on the job, but like a lot of the mundane stuff I do on a repeated basis was from that course. Um, Totally recommend it. 2 thumbs up. It was great. And
and
it was
the course is can you like I guess the course is meant to be a way for like students who don't go to your big Ivy leagues to
right,
get
right.
opportunities in finance and kind of financial analysis.
Yeah, that's exactly right. So they leverage the course advertising as more like how to break in investment banking if you like go to a state school or something, which was like I'm sure people were able to do that with their course. That wasn't my end goal. I just really wanted a deep refresher on college plus some, and then leverage my experiences and my learnings from that course in my job interview, which is what I was able to do, which then got me the job I have now. I don't think I'd have my job now if I wasn't able to show what I learned in that course in the interview. So yeah,
And
I
I'm
couldn't.
pretty sure they even have it open to like high schoolers. I actually applied to it this summer, and they were gonna have me do it, and I was just stuff came up, and it was too busy. But if any of y'all are interested, it's cool, really cool program. Um, It's Invest Like the Street is the name, right?
Yeah, invest like the street analyst program. Yeah.
Yeah. All right. So Yaman Jane had a question. Do you believe in technical analysis or fundamental analysis?
So I believe in fundamental analysis for sure. If we see that a company's fundamentals are strong, strong management team, the business operations are crushing it, their metrics, their margins are expanding, they're in a growing industry, like for sure, fundamentals are definitely a thing when evaluating a company. Technical analysis is, lines on a chart and moving averages. Um, I'm not the type of person to throw thousands of dollars at a, well, I guess they both have different end goals in my opinion, right? So with fundamental analysis, you're trying to invest for the next 9 to 18 months, thinking that a company will be able to ride these industry tailwinds and, have these fantastic things happen to them because of their management team and their operating strategies. Like Dollar General, I did a really cool post on my Patreon talking about how they're executing on their operating strategy from like 2016, like to a T, right? And if you look at their stock price in the last 5 years, it's gone up. Where with technical analysis, what you're doing is you're trying to figure out in the short term what a stock price might do, simply because of how it's, the volume and the resistance and supports and that stuff like that. Like, does that stuff work? Of course it does. People have, shown that they can make a lot of money day trading lines and moving averages. But I would just implore I would ask, if you're a day trader and you believe in technical analysis and like all these fun things, like why are you not a billionaire yet? If you can get 1% every day, which is nothing for day traders, like in the course of 7 years, you'd be a billionaire. So why aren't you a billionaire yet? Like, it's a thing, yeah, but it's like Warren Buffett's a billionaire for a reason, right? Long-term fundamental analysis.
Right. All right. So we're about to wrap this up, and I just wanted to ask you if you have any suggestions for anyone who wants to pursue a career in finance or even just anything else in college. Do you have any advice?
Oh yeah. Let me think. Let me think. So I think with college, something people don't do a lot of, and I found myself doing this the first year or two in college as well, was they don't get involved enough. I'm not sure. Could you remind me, the people that are watching, so are they still in high school or are they in college?
Right. We're all in high school, freshmen through seniors.
Okay, perfect. So I would implore everyone watching this, whenever you get in college, get involved. If that's through some sort of organization or club that like interests you, if that, maybe like arts or rugby or whatever, like just get involved. A lot of the people you meet in college are smart people and they'll begin doing smart things and they'll get great jobs. And it's like, the networking effect. You hear the word networking a lot. And I, try and say like, it sounds sort of bogus. I'm not networking, I just make friends, but like it's so much more powerful than you think. So one, definitely get involved and get to college. Two, keep your grades up. It's hard to, not hard, it's easy to fall behind because, freedom and like all these different things. Focus on your grades more importantly than anything else. And think about Greek life. I joined a fraternity. I have a lot of help because of the guys that I've met. Actually, there's a guy that's going to be on my like I'm trying to start like a little podcast thing, but he's one of my fraternity brothers that I met, and he graduated. He's 8 years older, right? But he's like we have alumni stuff, right? So get tied in like that. 62 rental properties. He owns 62 rental properties, and so we're just gonna. I wouldn't have been exposed to his knowledge if it wasn't for my Greek life affiliation and all that fun stuff. So definitely I'd encourage Greek life, getting involved. I'd encourage internships. Internships are huge, right? You want to figure out, even if don't even go for like, if you don't get like a Fortune 500 company internship, like don't sweat it. Any experience is experience. Like you have no idea how valuable it is to just say that you were sitting at a desk for 6 hours a day trying to help a company figure out their accounting stuff. Even if you just being there and having that relationship, one with the employer, two with your coworkers, and three having it on your resume is huge. So definitely do internships, even if it isn't your dream internship. Like don't even sweat it. And then when it comes to applying for jobs, behavioral questions, or even applying for internships, right? Look at your behavioral questions. I was able to get through tons of job interviews really successfully because I was able to implement the STAR method when it came to my interview process, which just means whenever you're asked a behavioral question, talk about the situation, talk about the task at hand, talk about the actions you took, and then talk about the results because of that. If you can do that for your behavioral questions in an interview, the interviewer will fall in love with you, and it's super successful, right? So recap, get involved, network as much as you can, make the good grades, think about Greek life. Don't worry about it if you don't get some amazing internship. Like it does not matter, I promise. And then whenever you do interview for those internships, use the STAR method. It's huge.
All right. Thank you so much. I definitely think you should leave your, if you want to do the TikTok tag and then also your new platform.
Yeah,
You want to
sure.
leave that in the chat. I'm
So
sure a
leave it in the
ton of
chat. Sure, I
students.
can leave it in the chat. No
Yeah.
problem. Sure. Yeah, no problem. At Austin Hankwitz on TikTok, and then at Hankwitz Capital on Instagram, and then patreon.com/Austin Hankwitz. So I've got actually tons and tons of free resources that I've written myself on stock pitches, company comparisons, earnings calls, as well as how the economy is performing in relation to the stock market, right? GDP growth, expansion, as well as contraction and unemployment rates on my Patreon. It's all free. It's all there. So that's in the chat as of now. So if you guys are watching, thanks for having me. I'd appreciate if you guys would check me out on Instagram, TikTok, and Patreon. And I'm super active on Patreon and in the comments. So if you are if you have a question, drop a comment. 9 times out of 10, I'll get back to you.
Absolutely. Yeah. I remember you got back to me on one of my direct messages. And I was like, wow, he actually cares. And that's how we got this put together. I just want to thank you so much, Austin, for coming on and kind of giving us a little glimpse of your life and a ton of great advice. And
No problem. And I've done tons, I wouldn't say tons, but I've done several of interviews with people that are in college still trying to figure the things out. Or I'll try and be as much of a resource to all people watching as I possibly can. If you guys have LinkedIn's, which maybe some of you guys do, might be still a little young for that, shoot me a message on there, or DM on Instagram, whatever you guys want. I'd be happy to be a resource for you all.
all right, thank you so much.